But which direction is the market headed from here on? What sort of a call have you to take while you are building your portfolio? And which are the sectors which are a pure go zone and which are the ones that are in the no-go zone? We are now joined by Abhishek Basumallick, who is the Chief Equity Advisor at Intel Sense Capital, joining us on the show. A very good afternoon to you, Abhishek. Thank you so much for joining us in ET Now. And markets, once again, fresh record high levels hitting are here for at least at the Nifty. But given the current scenario and the valuations in the market, how much do you think is advisable to go all in?
First of all, good afternoon to you and your viewers. See, I think the markets have been slightly on the expensive side for a while now, and Indian markets, if you look at globally, other than the US, we are the only markets where we are actually seeing uh, strong GDP growth, strong business performance. So I doubt if the Indian markets are going to get cheap anytime soon. We might see intermediate corrections once in a while, and that is par for the course in a bull market. But I don't see, that valuations are going to be very cheap anytime soon.
So valuation, you don't see them actually getting any time cheaper anytime soon. But what about the broader markets? Because this time around, when you've seen the rally at play in the broader markets in particular, it's pretty different from the previous times when we saw the broader markets rally. And I think there was a sense of panic or a sense of the fact that this rally would entail or become a bubble going ahead. This time around, looks like it's the quality of the companies that have improved in the mid and the small cap space, isn't it?
See, there are two things which is happening, simultaneously. One is that we are actually seeing a pretty healthy sector rotation happening every 3, 4 months, 6 months, right? So you're not seeing any one particular sector or one set of stocks, just going through the roof. Something which goes up, a couple of times, a particular sector, it then sort of cools down for a while. So, for example, if you see PSUs have been cooling off a bit, or defense has been cooling off a bit, railways have been cooling off a bit. Uh, these were all doing fantastically well 6 months back, and so on and so forth. So, and now you just started the shows talking about IT. For example, IT has not done all that well over the last 6 months, about a year, and now IT is picking up. Pharma has picked up. So there is a definite sector rotation which is happening, which is keeping the market healthy. That's one important point. And the second important point is we are continuously seeing new IPOs coming in, large, small, all sorts, all sizes, which is also absorbing a certain amount of liquidity that is out there in the market. So both of this is actually preventing, in my opinion, some sort of bubble creation in the markets.
So, while you said that there is a constant change or sector rotation, so which are the sectors that you're seeing that are attractive or rather would be attractive for this next leg of rally for the markets?
See, like I said, IT looks to be picking up. Chemicals again looks interesting. Pharma, auto ancillaries, and I'm sort of fairly bullish on the Indian manufacturing theme, not only for the near future, but for at least for the next 3 to 5 years. I think India is stressing a lot in manufacturing, and we are seeing slow changes happening. Just the earnings season's been going on, so we participate in a lot of conference calls that companies do, and we've been listening to a lot of manufacturing companies speaking about increasing capacity, and their customers moving away orders from China to them. So this is a definite theme. It's not going to happen overnight. The results are going to take 5 years, maybe even a decade for it to play out. But I think that's a very, very important and dominant theme going forward.
How can I not ask you about the PSU index then? Because that was also a theme in the making. Everyone has, be it the defense space, be it the railway space, be it even for the matter of fact, power, or even the PSU banking space. Everyone was all out there in the PSU space, and that's sort of sector now is taking a breather. Do you think that this is just a short-term blip that is coming in the PSU space, and it is here to stay? The rally will pick up pace going ahead?
I don't want to segregate PSUs as any different from other companies. I would much rather look at companies, whether they are PSUs, whether they are privately held, based on the industry, based on the business that they are in, and how they are performing within that. So, for example, power as a sector, whether it's PSUs, whether it is non-PSUs, most players have done well because the overall sector has had a tailwind. Similarly, you look at defense. So it's not that PSUs have done particularly well. It is sectors where PSUs are dominant have done well. So the banking sector is one where you have very large players who are PSUs. You have SBI, PNB, Bank of Baroda. These are very large, prominent players in that industry. And if that industry has cleaned up its books, they've done well. Obviously, a large part of the benefit will go to the bigger players. In this case, the larger PSU banks. But if you look at the PSU as irrespective of the ownership, whether it is publicly owned or not, it is those PSUs where the sectors have done well, which have actually performed well.
About your sector that you're bullish, I see there's a rural consumption theme also that you are actually pretty bullish on at this point in time. Do you think that the change here is a good structural change that we are seeing in the consumption space, given the fact that we have companies now actually talk about the fact that the rural is picking up and it is performing better than actually urban?
See, actually, if you've seen post-COVID, there was a lot of economic distress in the rural area. So we saw what was termed as a K-shaped recovery. And only in this last quarter we are actually getting inputs from businesses saying that rural business is starting to pick up. So whether it is FMCG, whether it is food and beverages, snacking companies, that is where actually the first green shoots are visible. And then once rural starts picking up, that plays out into a lot of other consumption themes. It plays out into two-wheelers. It plays out into a lot of things like shoes, small ticket items, consumer discretionary. So a lot of ways. And the most important part is that rural pickup will actually boost incomes for a very large number of people, which then has a multiplier effect. So I think rural, it's definitely a mean reversion is happening. It's getting back on its feet. So next, we need to keep observing how things are panning out. But I think next, 2-3 quarters look much better than the past 2-3 quarters.
So Abhishek, let me ask you the tougher question in this market then. Which is the space that you're not liking? Which is the space that you believe is not that attractive at this point in time, given the fact that we've seen actually various sector move in tandem with the markets, isn't it?
See, I think we will. I'm not very bullish on metals, although the market seems to be, not very concerned. But I think there is a significant amount of challenge in the demand, at least in global demand, in things like steel and other products, and the kind of capacity and the kind of production that China continues to do is something which cannot be wished away. So that's a pocket where I'm slightly worried about.
All right, then we leave it there. Thank you so much, Abhishek, for joining us on the show and actually giving us a sense about how the market is structured at this point in time and which are the sectors that are actually seeing a good up move. According to Abhishek, yes, the market valuations may not come down lower, but what's healthy in the market is the fact that the way we are seeing sector rotation actually